After silver recently exited this blue symmetrical triangle, we've seen the invalidation of all of those support levels here to the downside. In addition, we've also seen that cumulative volume delta is actually decreasing significantly, which does show you that seller's aggression is actually regaining strength here. But to really understand what might be happening next to the silver price in today's video, we do not only take a look at those technicals, but also at the fundamentals and macroeconomics. And so let's start off with the weekly chart of XAGUSD of silver. And what you may have already guessed here is that we do see divergences between the gold to oil ratio and the silver prices. Whenever this ratio is actually moving to the downside, that historically always signaled crashes happening to silver. And in fact, you do see that happening once again. We are currently seeing that massive drop at this ratio. Well, why is this happening? Because obviously we tend to see that oil prices are currently surging as we are seeing gold prices plummeting. And that is exactly why we are seeing this ratio falling once again. And we currently expect that this is actually indicating that history is repeating once again, that we do see a divergence currently unfolding that has recently unfolded and is now turning to a convergence where we do see that silver prices are also starting to drop. As it happened throughout history, you can briefly see that exactly this is how it happened, for example, in the great financial crisis. You first see that this ratio is dropping. You tend to see that actually coincide to some phase of consolidation at the silver prices. You've seen the top being in, and then ultimately we've seen the silver prices drop significantly, and this gold to oil ratio slowly started to reverse to a upwards rally. Now, this is exactly what we believe might be happening next. We believe that silver prices might be dropping further. In fact, there seems to be a lot of downside potential, but we do expect to see a reversal here soon at the gold to oil ratio. Now, obviously, it's really hard to predict the war in the Middle East, but we can take a look at those historical evidences. And so, if you like this approach, don't hesitate to hit the like button, subscribe, and also make sure to write us a nice comment down below to support the algorithm and just make us a smile on the face. Thanks for your support. Now, concerning the stochastic RSI, what you can also see is that those last few tops at silver have obviously coincided to a top at the stochastic RSI. And you can see that this has been true here recently as well. We've seen a bunch of tops actually form out at the stochastic RSI here at silver. But recently, as we've seen the phase of consolidation and now this invalidation of this symmetrical structure here in blue, we have actually seen a sell-off or a weakening trend at the stochastic RSI, where we've now actually made lower lows and lower highs. And so we're certainly in a downward trend concerning the stochastic RSI, but also concerning the gold to oil ratio that we've just assessed, this certainly looks rather bearish. Now, we do have some additional information, which is the copper to gold ratio and the gold to S&P ratio for you, because those are also really beautifully signaling recessions, as you can beautifully see on the chart. You can see that those red areas have been the last few recessions, and concerning the copper to gold ratio, that recession has been signaled by a weakening trend, by a weakening copper to gold ratio. Why is this happening? Well, it does obviously make sense that you do tend to see gold actually outperform copper prices in times of economic stress. That does not mean that gold prices are rising. That does just mean that gold prices are falling less significant than copper prices. You have to understand that gold prices are still falling, but they are just falling less than the copper prices, and that is exactly why you tend to see this ratio fall, because gold as the denominator of this ratio is obviously leading to this ratio falling. Now, this has beautifully signaled the last few recessions, and as we are seeing this downward trend at this ratio for quite some time now, we expect a recession is more than overdue. Now, in addition, we take a look at the gold to S&P ratio to understand whether the stock market is rallying against gold or whether gold is actually strengthening against the S&P 500, against the stock market. Now, whenever we've seen that gold prices started to outperform the S&P, whenever we've seen gold prices outperform stocks, that historically has been signaling times of economic stress. We've seen that happen here before this recession in the 90s, beautifully illustrated by this short-term rally here to the upside concerning the gold to S&P ratio. We've also seen that happen before the dot-com bubble bursted. We've also seen it happen before the great financial crisis started. We've also seen it happen before the COVID crash, and we've also seen it happen just in the last few years. I mean, so it could actually happen before this crash that could actually be imminent, that could actually happen in the next few weeks, months, but certainly quite likely happening in 2026. And concerning those two ratios, in the last 3 decades, 4 decades, we've actually seen 100% hit rate of those two in combination. Whenever we've seen the copper to gold ratio fall, as we've seen the gold to S&P ratio rise, that has actually to 100% accuracy predicted recessions, and that is exactly why we're so bearish at Kronos. We do obviously have oil prices still surging, but we expect this to reverse as we might see deflationary pressures regain strength, and also because of the fact that we do obviously do not really have a supply dependency concerning the United States and the Gulf region. Now, concerning silver prices, which is what we're making this video about, we do obviously have not only from the technicals but also from the macroeconomics a quite bearish setup here. Now, we've talked about that in the earlier videos. In fact, we've actually predicted this sell-off as we've still been in this symmetrical structure here, but we've been able to predict this breakout to the downside because of the fact that we do see history repeat over and over again. We are seeing the technicals align with the fundamentals and macroeconomics in the perspective that we do obviously have the cumulative volume delta decreasing significantly to new lows here. That certainly is also a break of structure. I mean, if you actually mark those last few lows here, you can beautifully see that we've also just really dropped below a significant value here. You can see that we are now certainly ranging in areas where the visible range volume profile is signaling a lot of less volume has been traded recently. Now, that just means this is an area with less liquidity. It's an area with less volume, and so you tend to see that basically act as an accelerator button for the silver prices. As volume is decreasing here, we tend to see that accelerate the trend at the silver prices, and in fact we might just see it happening quite beautifully right now. Now, we have invalidated those support levels. We've seen structures being broken. We are seeing that volume is certainly looking quite bearish. In addition, we do have this empirical evidence that shows you history is always repeating, and that just seems to be a bearish setup for us at Kronos. If you appreciated this analysis, don't hesitate to hit the like button, subscribe, and also don't hesitate to ask questions down in the comments or just give us your opinion concerning silver prices. Thanks for your support. See you the next time. Bye bye.